Paul Atkins, President Trump's nominee to chair the Securities and Exchange Commission, has recently made headlines because, according to a recent ethics disclosure, he owns, wait for it, 54 life insurance policies. Even more shocking is that, according to a recent Forbes article, the value of these life insurance policies is an astounding 10% of his $327 million net worth. So all of this begs the question, why would someone with such a massive net worth own so many life insurance policies? Even more, why would someone who has equity in Chinese tech giant Alibaba, holdings in cryptocurrency, and stakes in venture capital firms also want his wealth growing in cash value life insurance policies, which have historically had much more conservative rates of returns? And lastly, what does this tell us about how the ultra-wealthy view taxes and wealth accumulation? In today's video, we'll explore all the possibilities as to what motivated Paul Atkins to have so many life insurance policies. All right, let's jump in. The first possibility is that Paul Atkins has exhausted all of the usual sources of tax-deferred and tax-free growth available to him through government-sponsored retirement plans. Someone with a net worth north of $300 million would easily max out any savings accounts such as IRAs and 401ks. With contribution limits of $8,000 and $31,000 respectively, and prohibitive income limitations. These aren't exactly the types of investments that would move the needle for an ultra-millionaire. Cash value life insurance policies, conversely, don't have any income thresholds, and they have no contribution limits at all. So if Paul Atkins wanted to contribute $10 million per year to a cash value life insurance policy, he could. Furthermore, the cash value in those policies would grow tax deferred, and he could take distributions out 100% tax-free by way of a loan. Now, it wasn't clear from the ethics report what kind of cash value life insurance policies these are, but there's a pretty good chance that they are either whole life or indexed universal life. If they're whole life policies, he could take those loans tax-free, but he would pay a net cost of borrowing. If they're indexed universal life policies, he could take those loans tax-free and cost-free, assuming he owns the policies with the right carriers. The second possibility is that he's just looking for a way to diversify his holdings. Owning shares in single stocks like Alibaba can be a fairly risky proposition. The cash value in life insurance policies like whole life or indexed universal life, however, isn't exposed to market risk. That money grows safely and productively and can be inversely correlated to stock market investments. Index universal life policies have historical track records of between 5 and 7% net of fees over time, while whole life policies are closer to 3 to 5% net of fees. As I've often said on this channel, cash value life insurance is an effective bond alternative. Reach into your portfolio, remove the bonds, replace them with cash value life insurance, and you'll increase your return, lower your risk, lower the standard deviation of your entire portfolio, and experience a better outcome over time. A third possibility is that Atkins may not be the insured on all these policies. According to the ethics filings, the cash value of these policies ranges widely, from as low as $1,000 to well over $1 million. Some experts see this as a sign that Atkins is investing in life settlements. That means that he may have purchased life insurance policies from other policyholders who are tired of paying the premiums. In this scenario, he would take over the policy and their payments and then reap a windfall when the policy insured passes away. In this approach, he'd be placing a bet on the life expectancy of others in exchange for a payoff down the road. The final possibility is that Atkins owns all of these policies for the purpose of estate planning. Because the estate tax exemption is only around $28 million, any of his net worth above and beyond that amount upon the death of Atkins and his wife would be exposed to a top estate tax rate of 40%. So he could be gifting money into irrevocable life insurance trusts that own life insurance policies outside of his estate. Any death benefits paid to these trusts upon the death of Atkins and his spouse would bypass the estate tax altogether and go to their heirs 100% tax-free. All this said, I think this is an unlikely possibility. There are much more efficient ways to purchase life insurance policies than by buying 54 separate contracts. I understand the concept of wanting to spread your risk out among multiple carriers, but doing so through the purchase of 54 different policies is a bit extreme. Because of carrier breakpoints, he could purchase much more death benefit at cheaper rates if he purchased larger policies from fewer carriers. Regardless of the motivation behind the purchase of Atkins' 54 life insurance policies, it does underscore one of the practical purposes for which one everyone might want to own a cash value life insurance policy, regardless of net worth. In general, it's a good idea to diversify away from the stock market with some of your portfolio. And historically, cash value life insurance policies allow you to get safe and productive growth without the risk associated with traditional bond allocations. Furthermore, many cash value life insurance policies allow you to take tax-free and cost-free loans, which could be useful in a rising tax rate environment like the one we're currently marching into. And lastly, cash value life insurance can also be beneficial because many carriers these days allow you to receive your death benefit in advance of your death for the purpose of paying for long-term care. And if you die peacefully in your sleep 30 years from now, never having needed long-term care, someone's still getting a death benefit, probably your kids or your grandkids. So there is that sensation of having paid for something you hope you never have to use. In short, is cash value life insurance for everyone? Certainly not, but what Paul Atkins' ethics disclosure shows is that it can play a critical role in some people's long-term wealth building strategy. I'm David McKnight. Thanks for watching.